Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hello, everyone. Good morning. Thank you for sticking around. Sorry about that little hiccup, but we are up and running and we are ready to perform another live stream here for you guys today. We are going to check out the market heat map really quickly before we jump into the markets with Nick. So if you give us just 1 second here while this loads up. Wi-Fi might be a little bit slow today. Here, let's see. I can refresh this page and see if that helps. Sometimes our internet goes out at the office. Fingers crossed that doesn't happen again today. That actually hasn't happened in a while. So we definitely don't want that to happen, but looks like the Wi-Fi is not being friendly to us today, but that's okay. I want to remind you guys, I'm going to show this to you as well. You can follow us on Instagram and Twitter, guys. We post stuff daily. Go check it out. It's a lot of clips from the YouTube videos as well as reporting on other news. We have our Instagram and our Twitter here at A1 Trading. We also have a Twitter account for the Edge Finder. You can literally go find the Edge Finder on Twitter. So go check us out on Instagram and Twitter at A1 Trading. But let's just go ahead and jump into the markets here with Nick.
Awesome. Thank you, James, for that introduction. And also, sorry about that market heat map. I think I don't know what's going on with that recently. I don't think it's necessarily the internet issue. I think it might just be something not working correctly in Google. So we might have to take a look at that. Speaking of the Google data stuff, we can show you guys another thing I was looking at. I made a tweet about this morning. This is GDP growth here across the major economies. Of course, as Forex traders, we're going to focus on mostly what you're seeing here, right? The Japanese yen, the Canadian dollar, the euro, the Swiss franc, the US dollar, etc. We just got this page finished. I worked on it a good chunk the last couple of days, and we've been pulling in more data for you guys in terms of Edge Finder users. But I noticed something really interesting just looking at this morning. The US dollar is really strong right now, but it's also at least quarter over quarter, the leader of the majors in terms of economic growth, which is very interesting, right? Because a lot of people fearful of recessions and that sort of thing. And of course, recession is still a very big possibility in the US. But it's all about, when it comes to Forex, I want you guys to think about something. It's all about perspective and relativity to one another. If you are looking at two economies and both are in a bad situation, right? They have high levels of inflation, and unemployment may even be on the rise. If that's the situation of two economies, your job as a Forex trader is not to say, oh, well, this one looks great, that's why I'm going to buy it. It's sometimes, as a Forex trader, if you're a fundamentalist, the idea is to try and pick the better of the worst, if that makes sense. So if there's problems everywhere, you're going to try and pick the one with the least problems. That's what it comes down to sometimes as a fundamentalist. If you're interested in that stuff as a Forex trader, again, it's very tricky when it comes to picking Forex pairs, things to trade, that sort of things. If you're going to be focusing on fundamentals, as we do so often on the live streams, it's something to pay attention to. Is like sometimes you have to pick the best of the worst, which is something I was thinking about today. Prior to the stream, I wanted to start somewhere a little bit differently than usual today. A little bit of a poke up here this morning on the S&P 500 as unemployment came out higher than expected, I believe. Let me double check that is in fact the case. We'll pull up our trusty Forex factory here, and we can take a look at unemployment claims. So you can see a bit of a spike here this morning across the USD as we had unemployment claims came out at 211K compared to the 195K, causing a bit of a sell-off on the dollar. I believe we've mostly corrected off of that initial sell. But something for you guys to at least consider, unemployment numbers coming out higher than expected here this morning ahead of NFP tomorrow. So The stock market jumped a little bit on this news, which again sounds a bit weird, but again, it's kind of this big continuous story where the Federal Reserve is trying to raise interest rates, and they are doing so at a certain pace. The more healthy the economic output is, the faster they're likely to raise rates. So when jobs numbers come out worse than expected or potentially worse than expected, that could cause the stock market to actually have a little bit of relief, like, hey, the Fed might not raise rates as fast. I know that was a lot. And if you're newer to this stuff, that was definitely not a beginner friendly ramble that I just did. I apologize for that. But if you stick around with the live streams every day, then you will eventually just pick up on stuff that we discuss in terms of the Federal Reserve. This is stuff that really moves the market. It's very important, right? We talk about this often, but most traders, what they do is they just look at charts. They look at, hey, the price is moving up or the price is moving down, or inverse head and shoulders, right? Very important distinction that we try and do on this channel is I try and show you guys at least what I'm looking at in terms of fundamentals, what really drives the markets, not just pretty chart patterns, right? Chart patterns can be useful, don't get me wrong, but they are not the holy grail. They're not the only thing that we pay attention to on this channel. So S&P 500 making a significant breakout here this morning. You've got resistance that was broken. So for the S&P bulls, this is looking healthy, and possible pullbacks could give us some more room to rally further. If I'm looking at this thing crossing over 4,000, we had a big corrective move, a big sell-off here. It's very possible that the S&P 500, should we get a bit of a rally going here, it has room. So, if you get some sort of break and retest continuation, the S&P looks like it has more room to squeeze higher. So we'll see how that plays out going into today's market action. Let's take a look at the dollar now, talk in reference to what we saw this morning. Again, unemployment numbers came out worse than, unemployment claims came out higher than expected, and caused a bit of some volatility on the dollar now. And you can see, grand scheme of things, though, we're still bullish in the USD. We put out a documentary style video yesterday. James did a great job here at A1 Trading. He put together sort of a recap video of the Fed's sort of predicament right now. It was super insightful. If you haven't seen it, I would definitely encourage you to go check it out for yourself. But we remain bullish on USD. Part of the reason here for that is that when looking at the dollar from a technical perspective, chart looks pretty healthy. But on top of that, I mentioned, again, GDP data. Here's an example of something that looks really strong for the dollar. You have 2.7%. They're leading in that category in terms of GDP growth. Now, we've talked about other things on the channel recently. For example, seasonality for the dollar looks pretty good, something that we're interested in paying attention to. Like if I look at Euro USD, you can see March, historically a negative month, right? Both on the 5-year trend average and the last 10 years. This is the euro. So again, we're saying sell euro, buy dollars. Hey, Dre, what's up, man? Dre, thank you for tuning into the stream. Thanks for the $2 donated to the stream. Very much appreciated. And you mentioned pound USD, said, hey, Nick, GU looks like a break and retest. Let's look at GU. I'll give you guys my take on it. So GU also falls under, in terms of seasonality, right? Historical trends. We are bearish for the month of March. And so if I'm looking at GBPUSD, right, I think we've got the same idea going on. Price breaking out to the downside here recently. Let's update our fibs just a little bit. In terms of a technical chart, right, a candlestick chart, price retesting here, it looks like an opportunity to potentially get short, but it's deeper than that. Like I said, yes, a chart can look pretty, but there's beyond that. When trying to place our hard-earned money, we try and look into more of the analytical side. So seasonality, like I said, looks good. Retail sentiment, this is another one, Dre, that might be interesting to you. 55% of retail traders are long. So there's a minority of people shorting the market in terms of retail side. Now, retail side is very interesting because when you get the retail crowd shorting something or buying something, it's generally an indicator, at least the way we look at it, an inverse correlator indicator. So if everyone is long, for example, AUD USD, that's a short signal. Now, this is not everyone in the market. This is just everyone who's on the retail side, the amateur traders, not the big institutions, not hedge funds, not banks, just the little guys. If the little guys are all short something, we look to get long. If the little guy is long everything, we look to get short, right? That's kind of how we use this retail positioning indicator. By the way, guys, this indicator that you're looking at, this is available for free. Retail positioning this data that you're looking at is available for free using the free Edge Finder version that we've released recently. If that would be something that you would benefit from, if you'd like to look at this data on your own anytime, it's free to do so. All you have to do is click the link that we just dropped in the chat. If you're with me here on the A1 Trading channel or on the Trader Nick channel, just click that link, fill out the form, and it will take you to where you can get access to this data for free. And you can bookmark it to your thing and pull it up anytime you want. So make sure to grab that free data. Why not, if you haven't already? Yeah, GU looks interesting on the short side, like I said. And if I pull up the full factor of GU, let's look at this. Pound dollar, right? -8 overall. That's a strong sell bias signal. So I like this on the short side. Now, this is not a new signal. This has actually been a short bias trade for a few weeks now. COT data pointing towards very much a strong bullish reading for the dollar and a slight bearish reading for the pound. Again, we talked about retail sentiment, 55.45, so not too much there, but fundamentals, economic numbers, GDP growth outpacing in the US, inflation better in the US, unemployment better in the US, and interest rates higher and more attractive in the US, expected to rise as well. Pound USD looks like a sell based on everything that we look at. Again, this is not a perfect guarantee that this is going to work out, but this is an idea, and this is what we do on these streams. We go over trade setups and ideas, and we stack probabilities beyond just looking at charts. And again, I hope that that's what you get out of my streams. I hope that if you are a regular viewer, then you know, the goal here is not just to look at technical analysis, but beyond that, to go into fundamentals, go into retail sentiment, COT data, right? Analyze the full picture of the market instead of just looking at only the charts. Charts can be deceiving, guys. That's the thing. Sometimes price action is not correct, right? Price action is not 100% perfect at predicting the markets by any means. It is somewhat subjective. Someone looks at a support chart or a support zone, and other people see resistance there, or trend lines are drawn very differently. There's no hard science when it comes to technical analysis. So yeah, just something to think about. So let's take a look at the euro. Specifically, we talked a little bit about the euro. The euro is rising a bit as we speak. And what you can see is a big drop, right? Big drop, big interest in the dollar coming in recently, followed by a little bit of a pullback here now. Finding support at the previous lows seems interesting. You've got 1.054, price coming in there, bouncing off this level. Retests could actually look sell side, in my opinion, going in favor of that dollar until something changes. Fundamentally, that's where I'm looking to be. So perhaps a sell trade could be forming on Euro USD. This is a 38.2% retracement after a major sell-off. I do really like that for possible trend continuation. So where could this euro go, man? Well, we saw this thing back in 2022 actually hit parity. It hovered around parity for a brief period of time before finding sort of a longer term buyer that came in. The question is, though, if things continue to trend lower, you have the potential for this thing to go all the way back down to parity and beyond. If this dollar situation continues to cook back up again, if, for example, if you get the Federal Reserve raising interest rates faster, as they say they're going to do, and continuing to push that narrative, it's very possible that you get a continuation of this euro downward trend that we're seeing starting to form off of that 4-hour chart, right? We had major resistance at 1.066869. Price came up into the zone, found heavy selling, and again, confirmed by this big pull to the downside. So a retest to me looks like a sell more than anything else. So check gold. Yeah, let's look at XAU USD, see what's going on with gold here this morning. And gold also popping to the upside. We've had a bearish bias on gold recently. No trades open currently, but looking like it might be setting up for something here this morning. And again, unemployment numbers came out, shaking the dollar a little bit, right? Causing a little bit of a pullback. But overall, I think the story is still to the upside for the dollar. Until that changes, I'll be looking for longs, and I'll be, if I'm wrong about that, then I will be looking to stop out and control risk and that sort of thing. So yeah, keep an eye on this gold chart for sure. As price comes closer to that 50% retracement, it could be interesting to see how that plays out. Guys, we're going to take a second now to thank one of our sponsors here. This stream would not be possible without the help of our sponsors. So let's go for a commercial break really quick. We'll be right back, and James will take it from here.
Thanks, Nick. Yeah, guys, I want to remind you that today's stream is sponsored by Superfunded. A1 Trading is excited to finally announce our official partnered prop firm, and we've got a pretty awesome offer for A1 Trading fans today. Superfunded is a new prop firm to enter the space that is looking to fund profitable Forex traders. If you have the skills but lack the capital, Superfunded is the answer. With Superfunded, traders are able to take an examination to prove their trading skills and have up to 90 days to pass. Superfunded is ideal for both swing traders and day traders, and even allows their traders to hold positions over the weekend. Superfunded is a funding program powered by 8cap, created for traders by traders. So if you're looking to get funded, check out their examination today and get 10% off when you use code A1 Trading. So Superfunded, a new prop firm to enter the space. They are partnered up with 8cap. So if you're fans of A1 Trading or you're fans of 8cap, we know that you will love Superfunded. Go check them out in the link in the description below. They have lots of different account options, examination options that you can choose from, ranging in different sizes of accounts that you can get access to after passing the examination. And of course, you can get that 10% off discount when you use code A1 Trading. So click the link in the description below to get started. Now back to the show.
Awesome. Thank you, James, for that update. And guys, remember, check out Superfunded, like James mentioned, and don't forget to use that code A1 Trading should you decide to go with them as a possible prop firm. We've got that 10% off code for you. Just punch in that code A1 Trading and you'll be set to go. Continuing on with this gold idea that I was discussing, price pulling back to this 50%. Like I said, this is a sell bias for me. And I want to show you guys something in terms of let's go to the edge finder and we'll pull up gold. So gold in the edge finder, getting a sell signal here, and it's been giving us a sell signal for a while. In fact, I'll show you that. Let's go look at XAU USD on the historical thing. So this is showing us sell signals, right? So this is historically what the signal was showing us from the edge finder, and then of course how price has fared against it. You can see it's been predominantly bearish for several weeks now, and now really starting to see that sort of come into play. Now again, gold chart has kind of cracked, right? So we had this really strong upward trend, fell apart here, and the edge finder started picking up the idea to get short. And now on a retest here, it actually looks like it might be setting up for another trade. So we'll be keeping an eye on that. And again, remember, guys, the edge finder is available if you're interested in that. The link will be down below in the description to check that out for yourself. In terms of targets for gold, I think probably a pretty reasonable start would be to see a return back to lows. If this thing is going to stay bearish, we would expect price to easily be able to hold a level of resistance. And if it does roll over, make its way back down to the previous lows. But beyond that, there's more than that. There is the potential for this thing to break lows and continue lower, right? When people talk about trends, oftentimes when they buy a pullback, right, they look to trade it right back up into here and take profits, right? This is a very, very common strategy. And if that works for you, if you take partials, hey, do your thing. But oftentimes what happens is you get a price return to the previous high, and then it breaks higher. And the big move, the juiciest part of the trend, oftentimes occurs right here, right? The breakout. And so if you can catch a breakout, it's huge. So when we talk about this gold trend and we say, well, hey, we might look to get short in this area. If we get short and we say, okay, 50% retracement comes into play, we're not just going to try and close here. The goal is not to just get back to the previous point. The goal is to do better than that and to look for the breakout. If the breakout occurs, we catch the really sweet move. And that's what it's all about, and something that we consistently look for when looking to trend follow is not to just take it to the previous structure, but to go beyond that and to look to trail stops from there. Guys, I want to take 1 second also to remind you that if you want access to our data, another thing you can do, if you'd like a free trial of a full version, a lot of you guys are already using the free version. Let me show you guys something. If you go to a1trading.com, this is our website. And if you just go right here in the bottom right, if you click this and you type in here, go chat now, and you type in here free trial. One of our staff members here is going to set you up with a free version of the pro version of our software. If this is something that you're interested, if you watch my streams every day and you just want to try out the full version, one of our staff members will set you up with a copy to try out for free. So if that's something you're interested in, make sure to go over here under the chat box and just click that, and you can chat with one of my staff members there. Okay. Just a friendly reminder in case you do want to ask more questions or you're curious about our software and how we use it. I know that when you're watching a stream, it's kind of hard to go through the whole thing. You may just get glimpses of things and be like, oh, that was cool. I want to check it out for myself. That's how you can do it. So the last thing I'll say about gold, one of the reasons why it's not like my top priority sell right now. Right now, my favorite trades happen to be with just like US dollar currency pairs. But when looking at gold here, and let's see if I can find it. I must be blind. I'm missing it. There it is. So if I'm looking at gold, for example, here's the historical month-to-month trend of gold. And what we can see is that the month of March and April are pretty uninteresting. Things really were expected to be bullish as they were January, February. January, February, really strong expected months for gold. Then we teeter out and we kind of go sideways for a while where we don't have a strong expectancy for gold. We have a pop in August and a decline towards the end of that year chart. So right now we don't get a lot of confirmation in terms of seasonality for gold, but let's see what the retail crowd thinks on gold. I want to add we're going to add commodities to this list as well so that we can see gold. And there it is, 63% of retail traders are long gold. This is sort of a red flag, because if that's the case, if the retail crowd is bullish on gold, we might want to consider not chasing the same trades as the crowd, if that makes sense. And if it doesn't make sense, the basic idea behind that is that retail sentiment shows what amateur traders are buying and selling. And if we know that data, we can use that to our advantage to make sure that we're not just chasing the same trades as the losing crowd or the amateur crowd. Can the Edge Finder work with a phone? We have mobile versions available if you are if you have full access, if you pay for the access. Thank you for the Edge Finder. It has helped immensely with my swing trading. Awesome. I'm glad to hear that. Primary focus is just to give you guys more data faster so that you can look at all the different factors and make a more informed decision. Think about it this way. Paint an image for yourself for a second. If you had data that would give you a more accurate picture of what the market is likely to do based on several numbers of factors, right? If you're able to look at things like COT data and retail sentiment, seasonality, if that was something that you had access to, would that not be helpful to you? Right. That's why we built this tool. That's why we've invested so much time, money, and team energy into building this software. It's because it's ultimately worth it. We've had so many people who have, raved about how it's helped so much in building more confirmation in their trading. That's really ultimately what it's used for, is a confirmation tool across not just chart indicators, but also fundamental factors. Do you use a specific site to collect the data? The Edge Finder, Ben, uses a number of sites. It is a huge, huge campaign. That's really the beef of, in terms of development, what we do is pulling data for the Edge Finder is incredibly difficult. It has to go all over the place, pull it from different various sources. That's why, in terms of maintenance costs and upkeep and design development, that's why we have a price tag on it, right? We spent a lot of time making it very easy for you, the user, to just pull up the data you want to see without having to dig through 100 sites in order to get it. We do that part. You guys just get the data. That's kind of the purpose. That's the convenience factor of the tool. So yeah, gold continues to try and rally up into this 50. Not quite there, but getting pretty close. Let's see if this 50% retracement can come into play. We'll keep an eye on that one. Go from there. SPX 500, I want to take a look at the indices again for a moment. Price popping on the indices. This is big. Let me see, how are my stocks doing today? Let's see. This is the list of stocks that I own currently. So if I go to my stocks are starting out really well today. Shopify, PayPal, Intel, Microsoft, Amazon, Tesla, Google. Seems like a good start to the day for the stock market, which is awesome. I do a combination of trading and investing. So I am, when it comes to the stock market, I have plenty of stocks that I long-term buy and hold, or I trade the indices as well in the stock market. And then on the Forex side, I'm trading currency pairs, and I do a list. I have a laundry list of trading and investing that I do. But yeah, this is an impressive pop for the S&P. Again, guys, remember that one thing to consider is that tomorrow we have NFP, right? NFP. Remember this. If you are, I know this is a bit weird because it's usually the first Friday of the month, and that is usually the way they do it. But because it was like they pushed it back a week, and so that number is coming out tomorrow. Around this time tomorrow, markets will likely be moving quite substantially off of all of that chaos. So please be aware of that so that you're not caught off guard. We have jobs numbers coming out tomorrow officially at 8:30 a.m. US Eastern, and this is likely to cause some volatility for traders and investors across the board. So keep an eye on that for sure. Jobs numbers expected, guys, to be 224,000 jobs created. We'll be very interested to see how that comes out. Again, a big number that the Federal Reserve is very focused on is that jobs numbers, because the thing is with jobs are really important in terms of inflation and consumer spending and economic health. Because if everybody has jobs, everybody goes and spends money. And if everybody's spending money, it causes prices to rise. So in some ways, the Federal Reserve is wary about jobs growing too much despite rising rates. In fact, if the jobs come out hot, meaning we get like 300K jobs created, the Federal Reserve is more inclined to raise interest rates sooner. This is why sometimes you get good jobs numbers and the stock market falls, right? It's weird to people. They're like, what? How does that make any sense? Well, it's because Federal Reserve sees 230, 250, 300K jobs created, and they're going to say, oh, things are okay economically speaking. Let's raise those rates and kill this inflation thing. Causes some volatility in the markets. That's why we put out that documentary on the A1 Trading YouTube channel yesterday. Make sure to watch that if you have not already. Team in a lot of effort to put that out there. So